Have you ever wondered what ETFs are and how they can benefit your investment portfolio? Welcome to the fascinating world of exchange-traded funds, or as they are more commonly known, ETFs. These financial instruments are a unique blend of various assets like stocks, commodities, or bonds, bundled together to create a single tradable entity. Imagine a basket filled with a mix of fruits. Each fruit represents a different asset, and the basket as a whole is the ETF. Now picture trading that basket in the financial market, just like you would a single stock. That's essentially how ETFs operate. One of the biggest advantages of ETFs is their ability to diversify your investment portfolio. With ETFs, you get exposure to a wide range of assets, reducing the risk associated with investing in a single asset. Now that you have a basic understanding of what ETFs are, let's delve into their history. ETFs have a rich history that dates back to the early 1990s. The first exchange-traded fund was launched in 1993 by State Street Global Advisors. This fund, known as SPDR, mirrored the S&P 500 and offered investors a new way to diversify their portfolios. The creation of ETFs was driven by a need for flexibility. Traditional mutual funds were, and still are, only priced at the end of the trading day. ETFs, on the other hand, are priced throughout the day, allowing investors to react more swiftly to market changes. Over the years, ETFs have evolved considerably. From tracking popular indexes, they've expanded to cover a wide array of sectors, commodities, and even strategies. We now have ETFs that focus on everything from technology to healthcare, from gold to green energy. From their humble beginnings, ETFs have grown into a powerful investment tool. But how can you invest in them? Investing in ETFs is quite simple and accessible, even for novice investors. To start, you'll need a demystify account, which is like a digital bank account where your ETFs will be held. Simply select an ETF you're interested in and place an order to buy the number of units you want. Now let's talk about holding periods. If you're looking for steady growth over time, long-term holding is your best bet. This approach lets you ride out market fluctuations and benefit from the power of compounding. On the other hand, short-term holding can be a good strategy if you're adept at predicting market trends and are comfortable with higher risk. Let's consider some top-performing ETFs in the Indian market, such as the Nippon India ETF Nifty Bs and the ICICI Prudential Nifty ETF. These funds have consistently delivered solid returns, making them a favorite among investors. ETFs offer a plethora of benefits, but they are not without their drawbacks. Like any investment, ETFs come with their own set of advantages and disadvantages. On the bright side, ETFs offer a degree of versatility that's hard to match. They're traded like individual stocks, but they give you the diversity of a mutual fund. This means you can buy and sell them throughout the trading day at prices that change in real time. Moreover, they're accessible to everyone. With a modest sum, you can get exposure to entire sectors, commodities, or even countries. Take the example of Jay, who started investing in a technology-focused ETF with a small amount and saw significant returns over a decade. However, ETFs aren't without their pitfalls. While they allow for diversification, not all ETFs are created equal. Some are thinly traded, leading to liquidity issues. And let's not forget Sarah, who invested heavily in a niche ETF and ended up losing a substantial part of her investment. Investing in ETFs can be a game changer for your portfolio, but it's important to consider all the factors before diving in. So, we've covered a lot about ETFs today. We've explored their nature as investment vehicles, journeyed through their history, and navigated the process of investing using a demystify account. We've weighed the pros, like portfolio diversification and flexibility, against the cons, like potential lack of liquidity. We've also considered the merits of both short and long-term holding. Remember, informed investing is smart investing. Until next time, keep your portfolio diversified and your investments wise.